Let's bring in Yahoo Finance's Brian Sozzi with his exclusive conversation with Jeffrey Gundlach, live from LA for us this morning. Brian.
Hey, thanks so much, Akiko. Yeah, on the 18th floor here at Double Line, watching a big, beautiful sunrise here in LA. But I caught up with Jeffrey Gundlach, the founder of Double Line, yesterday at his California estate ahead of their Roundtable Prime, where they share a lot of their investment outlooks and ideas for the year ahead. He suggested investors really pay careful attention to the bond market because it might be saying a recession could be in the cards.
I think the bond market is already showing enough of a recession indicator that by 2023, it seems pretty likely. And like I said earlier, I don't think a lot of Fed officials and economists and investors appreciate the fact the economy keeps buckling at lower and lower interest rates. So I think the Fed only has to raise rates 4 times, and you're going to start seeing really a plethora of recessionary signals. I think it's certainly a non-zero probability that you get a recession in the later part of 2022. That's going to be dependent again on how aggressive the Fed is and the like. So one thing that we did notice in 2018 is the Fed they stopped QE. They started quantitative tightening, letting the bonds roll off, and then they started raising interest rates, and we got an instantaneous bear market.
And Akiko and Zach, let's keep in mind when that call by Gundlach is coming. Oh, we just had Apple hit a $3 trillion market cap. Equities are trading at some of the highest valuations in years. And it is overlooking, in many respects, these moves in the bond market. You saw the bond market, the 10-year yield had its really the strongest first day of trading gain since 2009 yesterday. So at some point, somebody will be right. The market looks to be right now in terms of equities. But I think what Gundlach said is very, very telling and very important for longer-term investors.
And Brian, I know he also weighed in on what's playing out over in China. There's been a lot of questions about whether, in fact, the opportunity within China, particularly the growth opportunities there, still outweigh the risk factors that are there on the ground. What did he say about that?
Yeah, I have a full story hitting shortly soon, Akiko, on this on the Yahoo Finance homepage. But in short, Gundlach telling Yahoo Finance that he views China as uninvestable, really going at length and talking about how the Chinese government has cracked down on Chinese internet companies. Of course, it's a story you've been following very closely, the issue with Didi, but also, too, warning about the relationship between America and China, how it is still fray. But again, Jeffrey Gundlach telling Yahoo Finance exclusively, they just views the country as uninvestable here at this point.